My Forex Funds.
My Forex Funds.
And all these firms that are not allowed to take US customers.
Being investigated by the regulatory authorities in the US and Canada.
My Forex Funds have just been frozen.
All these firms, they're licensing from each other.
Is this the end of prop firms?
No, it's not the end. But we need to talk about what's going on. Lately, one after another, prop firms are shutting down, and I've heard many people come up with many reasons why that could be. So today I want to cut through all the hype, bullshit, and unclear answers and give you a clear view of what is actually going on. So we will not waste any more time and let's get into it. So what is going on with prop firms? Why are they shutting down? The reason is rather simple. Prop firms essentially offered CFD trading to US clients, which is not allowed, and now the regulators in the US are taking steps to prevent them from doing so. Let me explain to you in a bit more detail. Despite the potential for high rewards, CFD trading carries with it a notable caveat in the United States. It's not allowed, and it's not legal for brokers to offer CFD products to their clients. Which is something that has been respected by all regulated brokers who wanted to do business in the US. But with the rise of prop firms, it became rather obvious that many of them mistook the lack of regulation for their business model as a permission to offer CFD products to US traders. The fact that there is no regulation for prop firms as a business model does not mean they can offer CFDs to US traders. However, this didn't stop prop firms from offering CFDs to US traders, operating in a gray area of the regulations. The landscape seemed wide open, with few immediate repercussions, which was encouraging a bold, even though a bit risky approach to trading practices. The situation took a dramatic turn when the US Commodity Futures Trading Commission, or the CFTC, stepped in and shut down My Forex Funds. That action sent a clear message. Offering CFD products without the proper license in the US was not going to be tolerated. The crackdown highlighted a stark reality for prop firms operating under the assumption that they could do essentially whatever they want. It wasn't going to fly anymore. That was the moment where we saw many prop firms change their marketing to make it clear they're using simulated accounts. At the time, it wasn't clear why exactly, or what exactly was the reason why MFF was shut down, so everyone was doing whatever they could to avoid the same fate. What people didn't realize yet was that it were those offering CFD products to US traders that the regulators were after. And here comes the interesting part. Since many prop firms are not companies based in the US regulators have actually very little control over them. They can't shut them down, they can't force them to stop offering certain products. So the regulators needed to get creative, and they did. They started pressuring large companies who offered infrastructure to prop firms, payment providers, platforms, and most importantly, MetaQuotes, and that's the reason why prop firms are now losing their access to MetaTrader platforms. Until now, brokers would offer prop firms their demo accounts under their MQ license. In practice, that meant that pretty much anyone, anywhere could have opened a prop firm and offered CFD products to US traders through an offshore broker with a MetaTrader license, and MetaQuotes wouldn't know about it and would have no control over it, which the US regulators didn't like. So they have pressured MetaQuotes, who started pulling their licenses from brokers who offered their demo accounts to prop firms, which meant one thing: prop firms had to shut down. They had no platform. And this is where we are now. More and more prop firms are losing their access to MetaTrader, and we can see them moving to different platforms such as cTrader or DXTrade. The problem with that strategy is that these prop firms assume that they will be fine using the other platforms, since there's no regulatory pressure on them. But I think it's important to note that cTrader is clear on their website that their services are not available to US citizens. And DXTrade is a small, unknown platform that has not yet been noticed by the regulators. But once a lot of prop firms migrate to these platforms, they will come under the same scrutiny of the US regulators and will be forced to do the same as MetaQuotes. So, even if it works for a while, trading with these kinds of prop firms, you are taking the risk that they will be closed down sooner or later. We have contacted DXTrade ourselves and asked if they are allowed to accept US clients. They said they haven't heard from regulators yet, but if they do, they would have to comply. Since filming the video, we've received an update from DXTrader, saying that they are discussing the situation with their legal team now. They now probably realize that they might meet the same fate as MetaQuotes. Now, what about us? Is Lux going to meet the same fate? No. We've been getting ready for months, making sure we are following all of legal requirements. On top of that, we have our own license for MT5 directly from MetaQuotes. We do not offer our services to US traders, and we make sure that all our live accounts are funded with real capital and use an A-book model. Therefore, to all of our traders out there, you can have peace of mind knowing that we are not going anywhere anytime soon. Thank you if you've made it all the way to this point in the video. I hope I helped you understand what's going on in the prop firm industry. If you liked the video, the buttons are down below, and if you want to get in touch with us, the links are in the description. Thank you for watching this video, I hope you learned something, and see you soon.